welcome to the Rich Auntie podcast. Your host, Kia Valentine, will guide you on your journey to financial freedom, business success, and a luxurious lifestyle. Get ready for expert tips, inspiring stories, and practical advice to help you live your richest life. Let's dive in.
All right, welcome to the Rich Auntie podcast. I'm your host and favorite Rich Auntie, Kia Valentine, and I am super excited about this episode because we're about to talk about our taxes. Now, I know we're in tax season, and I know some of you are like, okay, why are you excited about taxes? Because I know for many people, it's number one, boring. Number two, confusing. Number three, painful. And I get it. But you know what? I love all this business stuff, right? So I don't know, call me weird, call me whatever, you know what I mean? But I just enjoy it. And even more than that, it's necessary. So whether you love it or hate it, you need to learn to love it, or at least, to get along with it, because it's necessary for your life and your business, because taxes aren't even just about entrepreneurship, business owners. It's not just for us. It's for everyone. And so everyone should be invested in, learning more about their taxes, how to pay less taxes and how to invest more in their business. And so today, what we're going to talk about is how to avoid the common tax mistakes as an entrepreneur. So for my business professionals, this one is for you. Now, some of these things can be used all across the world, so you can still listen in. But this is mostly going to be focused at US-based entrepreneurs and business professionals. All right. And so let's talk about let me give you guys some story time. Let's have a story time, right? So I've been an entrepreneur for over a decade. Today, I'm a serial entrepreneur. I run multiple businesses in different countries. And so, but there was a time that I was what I call a wantrepreneur. When you want to be an entrepreneur, but you ain't really there yet, or you think you're saying something, all right? So that's where I started, right? And why I say a wantrepreneur is, yes, I was in business for myself, but under the IRS tax code and all of that stuff, I was not classified as a business owner. And so if that's you today and you just got started on your business and you're not incorporated, you're not recognized as an entity, or you don't have an entity, right? Then, you're in the wantrepreneur category, and it's okay. You could always move to the other level, which would be an entrepreneur. And so over a decade, I've been an entrepreneur. Everything was in my name at the beginning, and for many of you that know me, I'm from the Bahamas. So we don't have income tax there. Okay. That's not a thing. And so this was an entirely different system I had to learn when I came to the US. And I remember the first time I paid taxes, and I was really excited because, I felt like, all right, land of the free, home of the braves, I'm here. And I paid my taxes, and I was just really excited. And I didn't mind the tax bill that I had to pay or anything. I figured, that's just what you do. But it wasn't until I became more experienced, I started to learn more. I started to gain the experience that I needed that I realized I overpaid. I paid a lot more than I should have if I had just understood, if I just had the knowledge to be able to help me through that, right? And so for those of you, maybe this is your first time in the US, or maybe you're just young and you're just getting started, pay attention, because I've been there, done that. And this is even for the person that's more seasoned and you're in business for yourself. Maybe you've been in business for a few years, but pay attention as well, because taxes is something throughout our business life that we're going to have to deal with every single year. Okay. And so as I became more experienced, I realized, hey, I overpaid. And then I started to wise up. I started to get the knowledge that I needed and all of that stuff. So imagine you're working really hard. And then at the end of, when it's tax time, you get this huge tax bill. Or imagine if you're like myself, where you're leaving money on the table simply because you don't understand taxes, you don't understand the deductions you can take and all of that stuff, right? And so imagine that. Well, today, let me just tell you, I am not a CPA, okay? I am not a tax professional. So definitely consult your tax professional, all right? Who I am and what I am is an entrepreneur, someone that is a serial entrepreneur going through life and business, just like every other entrepreneur, and just sharing my knowledge, because I'm going to give you practical steps today that's going to help you save thousands of dollars and, avoid some of the pitfalls that we make as entrepreneurs, especially when you're just starting out and you just don't know what you don't know. And when you don't know what you don't know is what hurts you, right? And so today is all about gaining knowledge, becoming more knowledgeable in taxes. So let's look at mistake number one. Mistake number one is not structuring your business under the right business entity. So whether that's an LLC, whether it's a S Corp, a corporation, and so on and so forth. Okay. If you are not classified, if you're using your personal tax ID for everything that you do, you are not recognized as a business according to the IRS. Okay. And so because of that, you can't get certain benefits. You can't get certain protections that you would get if you were structured properly. If someone sues you, they're going to take everything that you own because everything is under your personal tax ID. That is not where you want to be. Okay. And so the first thing I would recommend, speak to your CPA, speak to your tax professional and say, hey, this is my business. This is what I'm going to be doing. What is the correct business entity I need to be under, like that I need to operate my business under? That is your very first step. So no more personal tax IDs on everything. Make sure that you structure your business. Make sure you get the tax ID for your business and that you operate everything under that specific tax ID. And if you already started and everything is under your personal, congratulations on starting. At least you did that. That's a major accomplishment. But now it's time to look at everything and make sure that you're protecting yourself at the same time. So that's number one, not structuring your business under the right business. Now, number two is not keeping proper records. This is super important, especially for newer entrepreneurs, just mixing everything together. Like we call it a melting pot, right? You throw, like if you have a stew, you got the potatoes, you got the sausages and all of these things in this stew. That is not what you want to do. You want a clear line or clear indication of what is personal and what is business. Okay. And let me tell you why this is so essential, because you're afforded certain protections when you're structured under a business that you would not be afforded as under your personal tax ID. Okay. That's number one. And that's very important, because if you're ever sued, you want to make sure that they can't just come after your home for your kids. Okay. Like your car that you need to get back and forth. Like, you don't want any of your personal assets and everything tied up with your business. So it needs to be very clear which expenses are personal and which expenses are business related. So number two, it makes tax time a lot easier because you don't have everything commingled, right? You could track profitability and cash flow accurately. And that's important, especially when you're looking at loans and business funding and all of that stuff. It builds business credibility and professionalism. Banks love to see when you have everything organized. And so if everything is all over the place right now, you need to get it together. You need to make sure that you start separating everything from here on out. Business credit and funding, like I said earlier, it's necessary for that. And it allows you to pay yourself right. When you have everything structured and organized, you know exactly what your cash flow looks like, and you know exactly how much you should pay yourself, however frequently you decide to pay yourself. Okay. So another mistake is not keeping digital receipts and also digital records as well. Everything that's digital, you need a file. Put it on your computer, your laptop, whatever it is, make sure that you have that digital file with everything for that year. And so what I like to do is all of my receipts, I have a little folder, I just throw them in there. Okay. It doesn't mean you need to organize everything. You could get a bookkeeper to do that for you, but just make sure that you have all of your receipts. Also tracking cash. A lot of people, they don't track cash transactions, right? When someone gives you cash and it's not through, let's say, your business banking account, make sure that you make a note of that, whether you have a receipt book. And I know a lot of people don't use receipt books. I don't use receipt books today. But if you do handle cash in any way, just make a note of it, draft up a receipt at least and give it to the person, just so you have it for your records and they also have it for their records as well. And failing to log business miles. This is important as well. Make sure that you're logging all of your business miles, especially if you're traveling all over the place, right? To and from because of your business. Those are things that you could get as deductions, write-offs, and all of these things. So it's important. And I see a lot of entrepreneurs not keeping proper records. So make sure that you do that. So that's number 2, right? So we talked about making sure you're structured properly, which was number 1, and then keeping proper records, which is number 2. So the third mistake that I see is missing key deductions. So this was me in the beginning, guys. I got no deductions that first year because I was operating under my personal tax ID. So, my social, right? And so make sure that, yes, you're structured, but also make sure that you understand what deductions you can take as a business owner. I cannot tell you the amount of clients that I speak to. When I start talking about their deductions and everything, they be looking at me like a deer in headlights. Okay, like, what do you mean you could write off? I could write off my office space. And I'm like, yes, of course you can, so make sure that you know that. So your home office deduction, right? So make sure you qualify for it and also make sure that you are calculating it properly. And your CPA should be able to do that. And if your CPA doesn't know what a home office deduction is, you need to get another one, okay? Because clearly they don't understand taxes the way you think they understand it. And so that's why it's important as us as entrepreneurs to continue to evolve, continue to learn and grow, even though taxes is not something we want to major in necessarily. But you should at least know certain things about taxes. You should also know when things change, how it affects you and your business. And even if you're not a business owner, how it affects your life. Okay. All of these things are important. So even if just having a general understanding of everything and just making sure you understand the key things and the most important things is very important. So home office, right? Deducting travel expenses and meals. So the next time you have coffee with that potential client or, someone you're helping or whatever, the next time you take that trip somewhere and you did business while you were on that trip, make sure that you are deducting those expenses. This is very important. And so just keep in mind, if it's ordinary and if it's necessary, you can deduct it. Now, don't overdo it, right? Your CPA will be able to tell you, you should not be deducting every single meal. Like that Valentine's Day meal that when you took your significant other, that is not a deduction, okay? Because they're going to look at you, the IRS is going to look at you like, really? You deducted the Valentine's Day meal? Like, yes. And maybe you and your spouse, maybe you guys were talking business. When Josh and I go out, we try to keep it always, about life and all of that stuff. But sometimes, we're business partners. So sometimes, business just sneaks itself in there and we enjoy talking about it. So, make sure that if it's ordinary and necessary, you're deducting it. But please, not the Valentine's Day meals, all right? Skipping depreciation on equipment and other assets. So if you're someone that your business, you always have to buy equipment and all of that stuff, make sure that you know what your deductions are. You deal with heavy machinery and all of that stuff. And something called Section 179, and you could look it up in the tax code and all of that stuff. But it's a tax deduction. What it allows you to do is depreciate the full cost of your equipment and other assets in year one of purchase. Okay. That means that you don't have to depreciate it over time. You could take the full deduction right then and there, right after purchase in that tax year. Okay. So keep that in mind. That's going to save you a lot of money. And also just know that just because you have a deduction doesn't mean you have to use it in that tax year. If you have a savvy CPA, they will be able to tell you which ones you should take this year, which ones you should take next year, and how long you have to be able to take that deduction. These are conversations you need to be having with your CPA. Okay. If you're a business owner, you should be asking them 1,000,001 questions about taxes and learning and doing your own research, because everyone's business is different. So what I can deduct, you may not be able to deduct. What you can deduct, I may not be able to deduct, because the nature of our business is different. But just understand more of your business, how taxes affect your business, and what can you do versus what can't you do. That's going to save you a lot of money, because as you guys know, especially my business owners, we spend money like on the daily operations, on everything that we need to do, the equipment we need, the software we need, all of these things cost. And if you're just spending that money, and you could be bringing that back into your business, now you have more dollars to reinvest. Now you're able to do more. Now you have more opportunities for you to grow your business. You have more opportunities for you to be more efficient with your time, because you could hire another person to assist with this, or purchase that AI program that you need to for your business. So it matters. And this hits your bottom line at the end of the day. And so make sure that you do know what you're doing, right? And so another thing I see is not writing off your professional services. So if you have a CPA and you get charged, if you have a lawyer, if you have a wealth and business coach like myself, even my services can be deducted, right? And so a lot of my clients, when they come and I say, hey, make sure that you write this off on your taxes. They're like, wait, I could write this off? I say, yes, I'm a business. This is an expense that you're spending, whether it's to get better financially, healthy financially, whether you're learning about your business and how you could be more efficient. That is a tax write-off. And there's a difference between write-offs and deductions. So this would be a write-off, right? And so make sure that you are writing off all of the professional services that you get, your coaching, if you do masterminds, all of those things are write-offs. So keep that in mind. And another thing I see is forgetting retirement contributions. If you are contributing to an IRA or Roth IRA, or whatever, IRA, 401k, or any of those retirement programs, make sure that you are also getting the tax benefits from those as well. For those of you, I'm not a fan of those programs, but I know a lot of people use them. So by all means, at least make sure how they work and how they affect your taxes, because you could be leaving money on the table as well. And we're not in the business of leaving money on the table. We want it in our pockets. Okay. We want it in our pockets, guys. And so that was the third thing, right? Not keeping proper records. So make sure you're doing that. Now, the next mistake that I see, the fourth one, is paying yourself wrong. Many entrepreneurs, they're like, I don't know how much to pay myself. I don't know how often I should pay myself. All of these questions that they have about paying themselves, right? And so sometimes when you start a business, if you don't know how you want to pay yourself, it's necessary to figure that out. So whether you're paying yourself too much or too little is a problem, because you need to understand your distributions versus what needs to go back into your to reinvest in your business. All of these things need to be dialed in. Okay. And if you're not making any money in your business, then obviously you can't pay yourself, but at least have that information for when you are at that stage in your business and you have to do that. All right. So not setting aside enough for taxes is another mistake I see entrepreneurs make. Yes, we're in business. Yes, we have expenses and all of those things. Taxes are one of your expenses. Okay. So that's something you should be planning for. And that's something you should be figuring out all the time. And you can do quarterly. It doesn't have to be, oh, when April rolls around, you're just starting to even think about taxes. That's something that you should be thinking about every quarter. All right. So it's a 25 to 30% rule, put aside for your taxes. That way you could have, at least something there to pay your federal, your state, your self-employment tax, all of that stuff. And maybe you don't, the 25 to 30% rule, it's really more of a guideline than a rule. It's not like a hard rule, but it's a guideline to help you. You could put aside more, you could put aside less. But, if it were me, I would at least put aside that 25% at a minimum. Okay. But you could decide how much ever you want to put aside. And the next mistake that people make, which entrepreneurs make, is failing to plan taxes all year round. So like I said, when April rolls around, you may have already missed some key deductions. Okay. You may have a high tax bill coming your way because you did not take those deductions. So as a business owner, you should be having those quarterly discussions with your CPA, your tax professional, at least twice a year, if not, but at least having regular conversations with them, because you want to make sure that you guys are on the same page, because you're probably going to spend money on something or do something, and they can guide you and say, hey, could you wait just a day? It's December 31st. Could we wait until January 1st? It makes a difference. So make sure that you have tax strategy, that you're planning it out, and that you know exactly what you're going to do. Those consistent conversations do make a world of a difference, and it could also save you a lot of money. And so another thing is, don't ignore your state and local tax obligations. That's another thing. If you get something in the mail or from your registered agent, make sure that you're looking at it, make sure that you're taking care of it. You're not just getting the mail and throwing it aside with all of the other bills or whatever, because that's not what you want to do. Okay. The IRS, when they come knocking at your door, that's not a conversation you want to have if you have to get audited and all of that stuff. All of that can be prevented if you're diligent and, you do what you're supposed to do. So make sure you're not just throwing it to the side as if it's nothing. Look at it, take care of it. If you don't know where to start, find someone who could help you sort that out, or at least start taking the first steps to get there. All right. And so the next thing is taxes gone wrong, right? And what I mean by that is a lot of people, they want to do things themselves. If you're like me, I have this issue too. I'm like, if it's going to get done, it's going to be me, whatever the saying says, right? If you want it done right, do it yourself. That's what we say. So, sometimes we have the tendency to want to do everything ourselves, especially as entrepreneurs. Some of us, we're self-starters, we get it done, we get in there, we do what we got to do. And that's just how we are. We just take lead, we take charge, and we go, right? And we make it happen. Well, sometimes we're not as qualified as someone else to take on that role. And so what I would say is make sure that you have a CPA. If taxes is not your thing, or, that's not what you major in. I always say don't major in minor things. You should know what you're doing, but at the same time, leave it to the professionals. Okay. Pay the money to get your taxes done right by someone who knows what they're doing, because that frees up your time as an entrepreneur to do all the other stuff that needs to be done. So don't think you have to do every single thing yourself, especially if you're not qualified. I am not, like I said, I'm not a CPA. That's not something I major in. Now, do I know tax code and tax law and all that stuff? Yes. Why? I don't know. I may be a little weird, like I was a nerd before becoming a nerd was cool. Like I just like to learn things. I like to know things. I like to have conversations with people. I ask a million questions. But if that's not you, that's okay. Leave it to the professionals, ask your questions. And if something doesn't strike you right, then, do your own research. It's as simple as that. Because at the end of the day, when that bill comes around, the only person responsible for it is you, not even your CPA. Okay. So make sure that you are, leaving it to the professionals, but at least know at the minimum what is going on. So guys, let's do a quick recap. So number one, the mistakes that entrepreneurs do: not structuring your business under the right business entity, missing key deductions, paying yourself wrong, doing it yourself, and taxes, you're doing it completely wrong. These are some of the key mistakes that I see, and, some of the action steps that you need to take to correct them. So I really hope that this was valuable today. I was just thinking as I was going through my taxes and all of that stuff, I said, you know what, let me come on here and, just shed some light and shed some knowledge on taxes. Maybe it'll help someone. If you're someone like me, you're from a different country, you came to America. If you're a new person that's just getting started out and you're like, Kia, where do I start? If you're someone that's been running businesses for a long time and you just had no idea, it's okay. The good thing is that every day we have an opportunity to learn and we have an opportunity to grow. And as long as you're doing that, as long as you're course correcting, like you'll get to where you need to get to the right way. Yes, it may have taken you a little bit longer, but that's okay. At least you're going to get there, right? And so, I hope that this was beneficial for you today. Absolutely let me know. And if it was, please share it with a friend, a family member, your business bestie, someone that is an entrepreneur, business owner, sole proprietor, share it with them. That way, at least they're aware of some of these things, because maybe it could help them avoid mistakes and save them a lot of money. So thank you so much for your time. And I hope that this was beneficial for you. So whereas it is now March, and I know that it's Ladies Month, it's Women's Month, and we have a lot of women that are doing amazing things around the world. And I'm just here to say, I'm proud of you. We're all proud of you. Keep doing your thing, queen. Keep, rising above all the obstacles and challenges that we face on a daily basis. Keep pioneering, keep trailblazing, just keep being you and just being phenomenal. All right. And so what I want to do for the month of March and for Women's Month is I'm going to open up my calendar, and it should be posted somewhere. My Calendly link is somewhere, wherever you're watching this episode. So definitely click on it, book a session with me. It's a free session. I would like to help at least 20 women, whether that is, 20 women improving their life. That could be you want to start, scale your business, whatever it may be, you just wanting to become, who God intended you to be. That may be your thing. Maybe you've been struggling, trying to put all the pieces together or find the pieces, and just get to that point where you're like, you know what, I got this. Like I could do that. We all need that sometimes, myself included. So what I want to do, I opened up my calendar. It says Women's Month, like the next 20 women, book on my calendar, let's talk, let's figure out where you are in your life, where you want to get to, and let me be a part of that journey. And like I said, it's free. So, don't let this opportunity pass you by, because I know my time is very valuable and I respect everybody's time. And so definitely, take advantage of the opportunity. Now, for those of you who are business owners, men and women, and maybe, you want to do better in your business. Maybe it's something you feel like you're missing. Maybe it's something you need help in. I have a second link there as well. That's a free consultation with me. So feel free to click that link if you're a woman or a guy, and let's meet, let's talk about it, and let me see how I can help you. All right. So thank you so much for your time, guys. Thank you so much for taking the time to watch this episode. This is your rich auntie signing out. And, for me, my hope for you is that you continue to live wealthy in your friendships, your relationships, wealthy in your bank account, in your spiritual journey, just overall abundance. I pray that it flows to you every single day. But thank you so much for your time, guys, and you all have a wonderful day.
Thanks for listening to the Rich Auntie podcast. If you enjoyed this episode, be sure to subscribe, rate, and leave a review. Follow us on social media for more tips and exclusive content. Until next time, keep shining, keep thriving, and remember, you deserve to live your richest life. Yo.